Wow, that's great. Everybody.
Yeah, we have a big turnout today, so.
Just, I haven't a few weeks. Have you been on? All right. Jack Spur, I see you there with the guitar in the background.
Oh,
If we hit a pause, will you play a song for us?
Oh, it depends on how it goes. Bob
It
could
would
sing.
probably be
Bob
escort
could
music
sing
off.
All right, well, let's get going. I think we have everybody in right now, so that's great. Thank you. This is going to be our last session for a few weeks. We started, I guess April at this point, and they've really been interesting. We have a program, Women in Leadership, that we're launching or two, and then we're going to review Matt for the discussions that we've started. They've been a lot of fun. We've learned a lot about some of the leaders on the South Shore, and it won't be any different. I'm looking forward to a great hour with Bob Fraser. Bob what is president and CEO of MountainOne Bank, which has it's a bi-coastal bank in Massachusetts with offices here on the East Coast in Rockland and the West Coast of Massachusetts out in the Berkshires in Williams. So he is often doing that commute and been involved with the chamber for a long time. He was chairman of the board back about 10 years ago in 2010. And we have a couple of past chairs also joining us. I see Al Macdonald and Jack Spur, and Jim Dunphy is usually on the line. And I saw him signed up, so he should be coming in, but we have several past chairs joining us today. But with that, let me turn it over to you, Bob. You've been very busy building MountainOne. You've had great success there, but some of the people here and the ones listening on it when we post it won't necessarily have had a chance to work with you because you do split your life between the Berkshires and here. But give us a little sense of your background growing up, how long you've been on the South Shore in your banking profession. And was there a profession before banking?
Oh, well, I'm glad we have a full hour. But first, great to see some old faces, old acquaintances, and folks that have been involved in the chamber for so long, as well as so many new faces. But it's absolutely great to see the continued transition and growth within the chamber. But thanks for the introduction, Peter, and thanks for the opportunity to be a participant in the program. I know we do some virtual town halls, and it's been a great way to adapt in this COVID environment and connect with our employees. So I can understand how this is a great way to connect with members of the chamber. Going back to your question about starting out, I got into banking by accident. I graduated UMass Amherst in '81, and talk about a difference. Interest rates were up in the 20s in 1981, whereas they're in the threes now. So we're in the middle of a significant recession. Jobs were tough to come by. I was a political science major. I wasn't sure what I really wanted to do. I was thinking about going to law school and needed a job. So I ended up walking up the street in Lower Mills to Milton to Baybank, Norfolk at the time, and took a job as a teller and worked there for about 6 months. in the teller position, and then I was able to post for a job in the commercial lending department. And then about a year later, I got into their commercial loan officer development program and became a commercial lender, and have worked at various institutions, both on the South Shore and in Boston, up until 2007, when I came to South Coastal Bank, which was a small institution headquartered in Rockland that was a mutual institution, which was something that I didn't even know anything about. And when you think of banks, we have stock banks such as, a Rockland Trust, a TD Bank, they're owned by shareholders. And then you have mutuals. There's a whole bunch of us. Most of us are former savings banks or cooperative banks, that there really is no stock ownership, where we have a different governance proposition, where we have either corporators or the depositors own the bank. And at that time, South Coastal was going to merge in with two other banks under a holding company out in the Berkshires. And it was a very odd dynamic, but in terms of geography, but when you think about or look at the challenges that the banks in the Berkshires were having, and that there was a declining population base, still is a declining population base, and an aging population base, and no meaningful growth opportunities. And then you had South Coastal on the South Shore, which had a lot of growth opportunities, but didn't have the capital or liquidity to really meet those opportunities. By having these three banks under a holding company, we could use each other's balance sheet. And that was the initial reason for the merger. And we maintained the separate identities for a period of years. And then for efficiencies purposes, we decided to consolidate the three banks, and it was South Coastal here in Rockland, Hoosick Bank in North Adams, and Williamstown Savings Bank in Williamstown, right on the campus of Williams College. And we merged them in, and we decided to rebrand the banks, rename them to MountainOne, which was the holding company name. And over the past year, we've really have started a new branding campaign, especially here on the South Shore. You're going to see a lot of advertising. Us in the marketplace, once again, doing a lot of advertising, especially a lot through digital and social media, to create more brand awareness about MountainOne. We do have our own mountain goat, Mo, that's the logo for Mo, the MountainOne goat. And it's a MountainOne. Mo has some pretty good personality. And, Mo embodies the traits of our fellow mountaineers about being able to navigate tough financial terrain and weather a lot of different type of storms, and being out there. So we're pretty excited to be really introducing Mo to communities that we do business in. And so be on the lookout for Mo in the future.
I've got a 3-year-old grandson up from Washington visiting me, loves the animals. So do you have a t-shirt that fits a 3-year-old? My friends give me grief because almost everything I wear or drink out of is branded with some company name of a chamber member.
Yeah, well, I kind of ascribe to that same school of if it's free, it's for me.
Yep.
So, I think we can find a plushie for you, Mo plushie. So, we'll get it over to you. Pretty great.
I have one of the fleece jackets from the old bank that you gave me, and I'm still wearing it about 10 years later. But the grandson will love having the goat on there. So
Absolutely.
So send it my way. Tell us about the difference. It's always fun talking to you because you're so involved, not just in the communities, but because of banking in the economy. The difference between the economy out in the Berkshire and the South Shore, how would you describe it, and what are you seeing? And how badly hit is the Berkshire with the loss of tourism this year?
Well, the Berkshire is definitely an area that relies upon tourism. They, just for background, the Berkshires have been struggling economically for quite some time, and they have been working on really building up the cultural base. Obviously, people have heard of Tanglewood. It's the #1 draw. We're further up in what's called North County, up in North Adams, and Williamstown as well as in Pittsfield, which is called Mid County. And that's Pittsfield's more industrial. North Adams was industrial, and although we do have Mass MoCA, which is the largest contemporary art museum in the country, over in Williamstown, there's the Clark Institute of Art, a very famous institute, originally founded by the family that owns Singer Sewing Machine, and so there's been more of an emphasis on tourism and cultural events, and it's also much more of a New York crowd than an Eastern Mass crowd. I tell people that if you're from Eastern Mass or Central Mass, you go north to Maine or New Hampshire, or you go south to the Cape. You don't go west. Quite honestly, everybody thinks Western Mass is Worcester if you're from Eastern Mass. And so there is much more of a New York influence, which, kind of grates on me when I see those Yankee decals on cars. But it's also an area that doesn't have a culture of entrepreneurialism. There is, a history of patriarchal type large employers. When you think back in the 70s, GE Plastic in Pittsfield employed 7,000 people. Up in North Adams, Sprague Electric employed 5,000 people, and and before that there were other large employers. So it's always been this mentality or this culture of a very large patriarchal type of employment, and everybody worked for the mill or worked for the factory, and from generation to generation, and there was never a reason to create this entrepreneurial spirit because everybody worked for the large company. That's been a struggle, and I compare the two areas. There are certain similarities in that the South Shore has had its challenges when you think about it geographically. In the late 50s, early 60s, the old Colony line was shut down as the expressway was built. But when you look at the expressway geographically, you go east, and pretty soon you're in the ocean. So there's one road in, one road out, north-south. That did not lend itself to many larger type employers headquartering on the South Shore. And so we have much more of a focus on entrepreneurialism. These privately held companies that have done very well in creating a lot of business opportunities, a lot of employment opportunities, a great lifestyle, very strong communities. And I take my experience in the South Shore and I try to transpose it up in the Berkshires to say, hey, the South Shore had these challenges historically. The Berkshires can overcome its issues by having a different mentality. So we, as an organization, also personally, I spend a lot of time with different organizations. In particular, an organization called Lever, which is really trying to foster a culture of what they call entrepreneurialism. So that's innovation in entrepreneurialism. And we recently opened up the Berkshire Innovation Center, which is located in Pittsfield, right next to our building, in the old GE plastic site, which is focused on developing opportunities for advanced manufacturing. But I do think, the bigger challenge compared to the South Shore that the Berkshires has is an infrastructure, in that not only is roads, because once you get off the pike, it's all state roads. It's more about technology infrastructure, and that the area is still struggling with, that last mile of broadband and things of that nature, fiber optic. But as you look at, the COVID situation, there's been an influx of population, and property values have been escalating, which was basically unheard of out there, because of folks leaving New York and resettling up in the Berkshires.
Is there a housing problem out there?
Yes, there is. There isn't, outside of, areas such as Lenox, Lee, Great Barrington, which are, kind of around the Tanglewood area in Lenox. The stock is incredibly old. There hasn't been much new building going on in the Berkshires over the last 2 decades in terms of new housing stock. And that is a challenge. And, I see it a little bit more because we deal with Williams College quite a bit. And like so many of us, they're going through a generational change as the baby boomers retire, and they're bringing in new professors, new administrators. And unlike when they recruited 25 years ago for these positions, there isn't the so-called trailing spouse who is going to come along and settle in. Here you have, in today's world, you have, both spouses with their own careers, and maybe one of the spouses does not want to move full-time to Williamstown, doesn't want the big, house in the 2-acre lot, and they're looking for a more urban location, which would be North Adams, and there's a lack of apartments, quality market rate apartments in that location, which is now, we've got a couple of developers who have identified that and are transforming some of the old mills into market rate apartments, as well as, creating some of the older properties and renovating them, identifying those properties and renovating them.
You gave a fascinating capsule of the DNA, the difference of DNA between the two regions in terms of economy and entrepreneurship. I look at the entrepreneurship on the South Shore and think it's pretty rich because of all the talent that came out of Boston headquarters, and for lifestyle reasons or quality of life have left big corporations and settled down here and started business. And I viewed that as part of our entrepreneurship, but I think you actually hit it much deeper, talking about the South Shore being transportationally isolated. So we had decades or centuries more of experience with building businesses. How does that work out for the bank? Community banks are really the catalyst for economic community development in most areas. You identify two very different personalities of regions. Does that change how the bank services both regions? And what are the main lines of business and opportunities for the bank out there versus here?
Well, when I look at our portfolio, and we've transitioned it quite a bit over the years, where we were more heavily involved in residential real estate lending to shifting that mix to more commercial and construction lending, especially here in and around the greater Boston area. We do quite a bit of commercial in multifamily lending, or multifamily development in and around Boston, as well as down in the Plymouth area. Those are two big markets for us. Whereas in the Berkshires, a lot of our lending philosophy is very different. They may not like it when I say this out there, but we do not lend to a guy with a pickup truck and a lawnmower that thinks he's a landscape contractor. We used to do that quite a bit, and we used to lose a lot of money on that. And it's like, hey, if it's not working, let's stop it, right? And so in some way, we've gone from being that, pat on the back, local community banker, to a community bank that is focused in on making an economic difference for the region. And by transitioning, we focused in on projects where we think it will make a stronger economic impact for the greater community. And a couple of examples, we did a 45-room boutique hotel in downtown Pittsfield. And we know it's not going to be a great moneymaker. It's always going to have these challenges. But we have great borrowers. It's structured well. And we saw it as part of the anchor of development in downtown Pittsfield, that these folks that built and own the hotel are a very strong local family in Pittsfield, and they want to really begin the rejuvenation of downtown Pittsfield with the hotel and other apartments and businesses in downtown Pittsfield. Again, going back to, as a different generation moves in, they don't necessarily want those houses. They want to be living in, more congested areas. Obviously, COVID-19 has changed some of that, but, there isn't that still, and, it's not like, Manhattan. It's not that, there's not that great density, but there is some critical mass that then can support, other restaurants, other venues in downtown Pittsfield. So that was a project that we put a lot of effort into and a lot of money. Up in North Adams, we have financed a project called the Taurus, which these real estate developers, their family of developers, they would come up every year to Massamoka, or every other year actually, and there's a indie rock band called Wilco that would have a festival at Massamoka, and they would come up for the Wilco festival, and they got to know the guys in the band, and one of the guys had this vision about this hotel or lodging, and they found this spot right on Route 2. It used to be an old motoring, and these guys started purchasing all the land, and it, in between, there's a river. On the other side, there's an old mill, Blackington Mill, but they totally converted this motor court into an oasis of 46 rooms. That they kept that motor court look in a way, and it was to drive a new generation of people into the Berkshires. So their target market are the Brooklynites, who are interested in coming to the Berkshires, not to go to museums per se, but to enjoy all the natural resources. There are great bike trails. There are that go from, it's actually the gateway to the Appalachian Mountains, right there in the Berkshires. So there's all these hiking trails. There are great bike trails. There's mountains over in Jiminy Peak. Just so many natural resources, as well as the cultural centers up and throughout Berkshire County. But they are trying to get a much younger crowd, the hip crowd, so to speak, up into the Berkshires, whereas that cultural emphasis really drew almost post or late stage baby boomers. They were coming up for a day, maybe they were staying an overnight trip to go to a couple of museums. The tourists, and I really give them a lot of credit, are building a business that is going to create a generational experience. And so that's another example of how we want to invest in the area. We've done some other projects throughout, but we do a lot of, that is tied towards hospitality. A lot of wedding venues up in that area. And so it's really, we kind of have this split personality of being heavily involved in construction and commercial lending on the South Shore, and picking and choosing up in the Berkshires. And given who we are in the Berkshires and the fact that the major players aren't out there or don't put a lot of emphasis, the larger banks don't put a lot of emphasis out in that area, we actually can make much more of a difference. We can have our voice heard out there versus, the challenge on the South Shore is, how do we differentiate ourselves when there are so many banks here on the South Shore? And I'd say another big difference is the noise. There's so much that's going on in our lives here that, you get drowned out by the noise. On the Berkshires, there's not as much going on. And that's a lifestyle choice. So when we do something, a lot more people notice it. And sometimes that's good, sometimes that's bad, because there's a lot of shortages out in the Berkshires, but opinions is not a shortage. There's never a shortage of opinion out in the Berkshires.
So you've opened up a couple of lines for me that I want to explore. We may run over 10 o'clock because it really touched on some great subjects. I do want to.
That was that interesting, Peter.
Some of the stuff you said, you may not have been aware of what you said. So we're going to tease that out a little bit and get into that. I do want to give fair warning, though, to Jeff Phelps, who's chairman of the Rockland Chamber of Commerce, and Dana Katz at Milton. So I'm going to be calling on both of them towards the end. I'd love to get an update from Dana on retail clothing business, and Jeff Phelps can tell us what kind of neighbor MountainOne has been in Rockland as head of the local chamber there. We also have some board members joining us, Stan Blackmur and Andrea Pike, and Lynn Sullivan of MountainOne, who's on our board, and then our Economic Development Corp, Rich Beal, Joe Sullivan, and Helene Kelly are here as well. But I want to touch on a couple of things with you. Banking and very small businesses, community banks. The chamber, as you know, is very concerned about what could happen to community banks with all of the overregulation and the difficulty for community banks to compete with the regulatory compliance cost and those burdens and what that means to a community. But you mentioned an example of, you'll not rush into funding the guy with the pickup truck and the lawnmower who thinks he's a landscape contractor. We heard during the PPP loans that an awful lot of small entrepreneurs had trouble filing for loans because they had no banking relationships, which was kind of surprising to me that there were that many. But where is community banking going, and what are the capital access options for the real small startups that are coming along? Is it going to be fintech? Is it going to be government loans? Are the community banks still going to be able to do the home equity loans to allow somebody to start a business? Where is that banking world and capital access going to go?
Yeah, well, it's definitely continuing to evolve at a rapid pace. Couple of thoughts, like as an example, when I first started out in commercial lending after I got out of the commercial lending development program, I worked at Bay Bank and in their small business group. And I think at the time, Bay Bank had, like 34, Bay Bank Norfolk had 34 branches. And I had 13 of them reporting into me, the branch managers reporting into me for commercial loans, local customers. And in those days, every single small business loan, it was more the exception rather than the norm that, or I should say it was the norm rather than the exception, that we had a second mortgage on that individual's home to back up the loan. And then home equity loans were developed, and people starting out on a business or having a business with a working capital need would then draw on their home equity loan to fund those type of loans, those working capital needs rather. It's really evolved. Part of it is that there are so many banks, trying to compete that, and then trying to automate because of the challenge that you mentioned with the regulations, that becomes more and more expensive to make a small business loan, and the regulatory burdens associated with it, that unregulated businesses such as fintechs can do it, maybe cheaper, and as well as they're using algorithms rather than, traditional credit underwriting methods. So, as muddled as my answer is, that's kind of where we are, where it's a very muddled environment right now. I do think that the PPP program definitely highlighted the value of community banks. The community banks were there for their customers and non-customers, especially, that first round, which was like a gold rush. Everybody was overwhelmed by it. And, we all managed through it. And then the second round was really, when I look at our data, as well as anecdotally speaking to other CEOs of community banks, it really reached down to much smaller companies, aren't sole proprietors, partnerships, but with it came, this evidence of a lack of financial sophistication and therefore more hand-holding to complete the applications, to have the financial reporting that was required in place to complete and process the application. But I do think that without doubt that at the beginning of the pandemic, the community banking industry really stepped up to the plate and addressed the needs of small businesses across the country and processing the PPP loans. And you can look at the data on the SBA website, and it really shows the impact that community banks made throughout the country.
I want to talk a little bit about leadership style before we turn it over to other people. And I'll share one of my favorite vignettes of working with you. People who don't know you well might think that you've got a pretty strong bark at first impression. And I remember a series of executive committee meetings when you were on the executive board. And I was presenting a budget proposal and said, you know, there is this discretionary item that could kick in the end of the year, but I didn't put it in the budget because the numbers wouldn't work. If we do really well, we can revisit the budget and put it in. And you kind of sternly lectured me and said, no, you should aim high, put it in, have a goal in your budget. So next month we came back to the executive committee, presented the budget with that change, and there was a big deficit in the budget. And I got a lecture from you. You know, you can't do that. You've got to have a balanced budget. Why would you have put in this discretionary item if you don't have the revenue now to cover it? And I had to look at you and I said, well, because you told me to last month. And you said, no, I didn't. And I think it was Jack Spur who looked at you and smiled and said, yeah, you did. And then you smiled, and I realized your leadership style is one to challenge people, not necessarily the definitive answer, but to challenge them and make sure they were thinking and make sure people know that what direction they're going in or that they have a plan. And I was always impressed with that, particularly once you let on that you got the joke that there was no one right way to do it. You just wanted to make sure I was thinking about what I was doing and at least had a rationale for it. And it always impressed me. And then you'd come back later, and when you were chairman, it always was, set the goals that are realistic. They don't have to always be aspirational, but you want to be able to achieve them. And how do we help you get there? So I've seen you in lots of leadership roles, never having to work under you, obviously, in the bank. But how have you evolved as a leader? You've gone through leadership training when you took over the bank at first. You mentioned this group Lever, and I'd like to hear more about that. But how have you evolved as a leader as your organization has grown?
Good question. Obviously people that know me and have worked with me or for me, or I've worked with them, they know I'm very direct. And that's just the way I am. In terms of evolving, professionally within our own organization, I think it's really important, especially at this stage of my career, that I don't need a lot of attaboys from the board, so to speak. I've done pretty well. I'm the CEO. I'm kind of looking, over the next several years for where I want our organization to be and to set it up so that, especially as a mutual, I'm a caretaker. I have a fiduciary responsibility to keep this organization going. We've been around since 1848. My goal is to keep it, in position for, the foreseeable future, not for another 170 years. I can't control that, but, for the next generation, so to speak. And so it's about helping people to succeed, as opposed to any of my own personal needs to get a pat on the back. But that doesn't mean I don't still challenge, because if it was easy, everybody could do it. And we're in a very tough business. We're in a business now where, the economy is in tough shape. Our, what we call our net interest margin, which is, the equivalent to our business's gross profit margin, is shrinking with this low rate environment. I think we're going to be retrenching over the next year in terms of growth. And so we have a lot of challenges, and that forces us to be thinking differently as to how to manage the business, how to reposition ourselves to take advantage of growth, which will come, again, I guess my expectation is, we're going to get through this year fine. I see next year being a more challenging for financial institutions because we entered this year with a lot of momentum, collectively. The economy was going well. Construction, our big part of our business is doing well. We own an insurance agency that was doing very well, and it's continuing to do well right now, which is great in these times. And we're building our balance sheet to protect against losses. So I see next year as a tough year, but when things are tough, you've got to do a lot of planning to emerge out of that period of time and grow and be a survivor. And so, part of my, focus and with our employees is to be thinking about the future quite a bit more. And that, out of any crisis, there are opportunities. Let's figure out what those opportunities are and position ourselves to take advantage of them. But it's not easy. And, we could take missteps. If we're going to take missteps, use that, identify that phrase, fail fast and move on. But also personally, I'm like Bill Parcells would say, I reserve the right to change my mind. And I will challenge people. If you got a better idea, convince me why it's a better idea. And then we'll go with that idea. It's not etched in stone because it comes out of my mouth. If someone's got a better idea, we're going to go move forward with that idea. And I think that's really important to realize that I don't have all the answers, that other people have better answers, and even more in a broader sense. And I think this is a challenge for us collectively, is I'm trending towards the end of my career, so to speak. We have an older customer base as well. We need new customers and we need younger customers, and we don't think like they do. And so I think we're starting to hear a lot of different ideas and thoughts that are kind of foreign to us, but we have to be accepting of them because that's how a younger generation thinks. And I need to cater to that younger generation to bring them in as customers. And collectively, we all do. And that's kind of a challenge, to understand how a younger and different generation, or a younger generation, is thinking differently than we have traditionally thought. And I think going forward, there's an opportunity for us, as they talk about a crisis. You look at young college graduates over the last year that may not have had the traditional job opportunities. I'm looking to bring in a couple of interns into the organization that eventually will be filtering through different departments within our organization to make us younger. And that's part of a transition that we're looking at.
So I noticed watching you, not as a direct employee, but watching you in my chamber role and your leadership style. Yes, very direct, the reputation that you've almost cultivated. but very interesting. It was always direct in challenging to make sure somebody had thought through, direct in maybe pointing out the roadblocks. But rarely did I hear you say, this is the way to do it. It's almost always a mentoring directness and leadership style of letting people, forcing people to think through, but letting them choose the option and live or die with it. But rarely was it a style of saying, you will do things this way. How did you develop that mentoring leadership style? Because it's really not a top-down dictating style. It really is that mentorship leadership. Where did you learn that, and who were your mentors in business?
You know, you call it mentoring, Peter. Other people would call it tour mentoring. You know, I think it's a combination of two things: 12 years of parochial school, and also how we were trained as lenders. You know, it's very confrontational in commercial lending, in that you would go into credit committee to present your deal to the credit committee for your borrower or prospect, and you would have 5 people at a senior level, all credit based, just beating the crap out of you on the deal and trying to poke holes in it, just highlighting every single weakness. And your job is to overcome every single one of those objections and have them vote in favor of the deal. And so that's how I was trained. And I think, you know, for better or for worse, that is how my management style was honed. Again, you know, sure, there are probably times when I'm too direct, and but you know, the good news is there's a total level of transparency there. There isn't a hidden agenda. You know, when I look at my mentorship, I think back to, again, you know, when I started out working at Bay Bank, and you know, hanging out with the older lenders, the more experienced lenders. You know, in those days, you'd often go out for drinks after work, especially on a Friday, and just, you know, being at the knee of, you know, experienced lenders and understanding, you know, their philosophy. And one of them, you know, I good friend, guy by the name of Art Taylor, that, you know, we became very friendly. Used to go to Patriots games with them all the time. You know, been season ticket. You know, he's had them since the beginning. I had tickets for, you know, 35 years. Used to go to all the games together, and you know, he spent a lot of time talking. It was always about stick to the basics. If you stick to the basics, you'll never go wrong. And we see it in every cycle when we start to veer away from the basics. You know, this you know, enthusiasm that things are going so well that, you know, you're invincible. You know, it comes back and haunts you. If you stick to your core principles and your basics, you'll do pretty well in life. And, you know, that's kind of a philosophy that has been drilled into me at an early age in my professional career that I continue to believe in.
So, Lynn Sullivan, is Bob a mentor, a tormentor, or would you like to stay on mute?
I would say he does see himself as a mentor. He wants you to try to, he'll lead the way and mentor you, and then give you the autonomy to be able to try to figure out the direction in which you need to go. So it's a learning experience. So I do think he is a mentor. I do think that that is his style, as direct and challenging as it may be, as opposed to tormenting. So yes.
I think the delegation saw that leadership style back on the DC trip a couple of years ago too, as I recall. It was fun.
Yeah, those DC trips are always interesting, especially coming from a bank. And especially when I go down with the ABA versus, say, the chamber, where, with the ABA, I'm dealing with, bankers from across the state. They go up to Capitol Hill, and their legislators are really happy to see them. They treat them like friends. And our legislative delegation can't wait for us to leave the office. It's like they want to, you know, just spread the disinfectant after we've been up in there.
So you mentioned you were closer to the end of your career than the beginning.
Mhm.
Let's put that horizon at 5 or 10 years from now. What do you do after that?
Good question. I've started reaching out, and I'm on 2 boards of private companies now, and that's pretty fulfilling work. Again, it's quarterly, so it's not too strenuous. On the board of Friendship Home, and that's pretty fulfilling. And so I do see myself, being on some type of a board role activity to, share my experiences with a company or an organization to help them be successful.
Great.
That's the great thing about commercial banking, actually. We see, and quite honestly, I brought this in, when I became CEO here, is that we see so many companies, good, bad, great, different management styles. And I was very fortunate in my career before coming in to the role initially at South Coastal, in that I had banked and had long relationships with some really successful, but more importantly, high character type people running companies. And I learned so much from them. And so while it wasn't banking specific, it was general business practices, which, covers all. And so I was incredibly fortunate to have that experience of dealing with those types of people.
Great. Jeff Phelps, chairman of the Rockland Chamber of Commerce. Are you still on the line here?
Yes.
So tell us about MountainOne. Good corporate neighbor in Rockland?
Yeah, I'd also start by mentioning Jack Spur is in the virtual room here, and A.W. Perry. I every time I see Jack, I try to point it out, but A.W. Perry and Jack Spur have been a tremendous friend to the town of Rockland. So I'd be remiss without at least mentioning Jack and his organization. MountainOne fits right into that same mold. I'm fortunate enough to serve on the community advisory committee with for Bob, and we're essentially a sounding board. They share some kind of high level bank planning and strategy with us, and they happen to be our bank as well. So I full disclosure, but I know as a small business owner in the town of Rockland, and of course a member of the Rockland Chamber, I have the opportunity to serve on a lot of different charitable organizations, and really see kind of at a high level what people who are really good to the town and continue to give back to the town. And I also know that as a member of this community advisory board, that it really is something that MountainOne makes a priority, is to give back to the communities that they serve. And they do it not only in the sense that they devote resources. Meg Dunphy, who's the branch manager in Rockland, is on many of the same, a member of many of the same organizations that I'm serving on, and gives of her time quite a bit. So they not only do that, but they put their money where their mouth is. Like A.W. Perry, it seems as though, any organization I'm part of, whether it's Rockland Holiday Magic or Reimagine Rockland or any number of those, MountainOne is always on the docket, and they're always very generous with not only, again, time, resources of their employees, but with their money as well. So I can certainly speak to that. Bob's a great friend to the town of Rockland, and I know from the community advisory board that they also do more than their fair share out west as well.
Great.
Yeah, Peter, I'd also have to add in, for full transparency and also for accolades, one, the Phelps family, especially Jeff's dad, Dick, been involved in MountainOne and South Coastal for generations. And his dad is one of the greatest guys and has been one of my greatest supporters. And I can't thank him enough. And the Phelps family, and what they've done for Rockland over the years, again, Jeff is really low key about this, but, but the Phelps family has been so involved in Rockland. It's great. And then I'll also add that, as part of one of our core commitments is community engagement. And that doesn't mean just us as an organization financially supporting different events or organizations in our communities. It also is part of the fiber going through the company that our employees are actively involved in volunteerism throughout our communities.
Great.
I would also just say that Peter and I won't hold it against you that you're the father of a Bowdoin graduate.
Yeah.
Thanks to Jeff for the comments.
Yeah, a couple of the Colby guys.
Thanks to Jeff for his comments about A.W. Perry, and I second that your dad, Dick Phelps, served on the Rockland School Committee with my dad in the 60s and has been there since. He just got off the school committee, I think. And Bob is on the board of Friendship Home, and I see his mentorship happening there. Andrea is on this call, and I think he's been a great mentor to her and people there at Friendship Home. So thank you, Bob, for all your service.
Great. Yes, one of the things we like to do, or we get out of these conversations, is a good sense of what's happening with the economy from different sectors with this. Dana Katz is joining us this morning. Dana, I haven't seen you in a while because I haven't had to buy a new suit or new shirts in a long time. Actually, I do because I've been putting on weight. I just have avoided going and buying any. But what is happening with retail clothing over at Milton's and in the industry generally?
Well, first, just before I get into that, I do want to say that Bob has been a great friend. We've been a client of the bank's for over 10 years. He was there for us when very few other banks would be. And he's been, I can attest to the challenging nature that he has to develop business plans. And it's really worked out well. But in terms of retail, I mean, we're very grateful that we didn't experience things that some of my friends in New York City did with looting. I mean, it was relatively manageable here, though we did have the 3-month shutdown. Before or as we've reopened, the competitive market's changing significantly as it relates to tailored clothing, which is our core business. You may have heard about the Tailored Brands bankruptcy. That's the parent company of Men's Warehouse and Joe Banks. They've closed a few stores in our trading area. Nordstrom here in South Shore Plaza has gone out of the tailored clothing business per se. Lord & Taylor is going through their challenges. So we're seeing the marketplaces changing, but at the same time, the demand for tailored clothing, our core product, is much less than it was, as I can see from the way all of you are dressing today. But what we've done is, we haven't lost sight of the importance of that category. We're taking care of funerals, unfortunately, which there have been plenty of, and smaller weddings as well. So, and weddings are also kind of an indicator of what's coming down the road because we book them up to a year or so in advance. So we're seeing a significant amount of activity as we lead into 2021. So we're feel bullish about that. But the other thing that we've done is tried to shed our image as just a store to buy suits. And we actually, before COVID started, embarked on this initiative to bring in more outdoor type of lifestyle clothing, which is just starting to come in as we speak. So we're bringing in brands like the North Face and Timberland and Sorel and Cool and Under Armour and things that people might not normally think of when you think of Milton's. But, they certainly are the types of products that our customers wear. So, we've been, I would say, to use a term that's getting a lot of play these days, pivoting and trying to balance out our tailored clothing core with other types of product. But when you take all of the product and you think about it, everything is available to everybody at basically the touch of a screen on your phone. So what it comes down to is the experience. And we've been fortunate that our team has been healthy. We've got all the protocols in place in the stores, and people come in and they're grateful for what we can do and help them through these important times of their lives, whether it's a wedding, whether it's a funeral. And that's how we've been moving along. Our e-commerce business has been good, but the business in the retail brick and mortar stores is really running at about half of what it was a year ago. The sportswear business is quite good. It's just the tailored clothing and accessory business is the one that's taking its hit.
So you actually have a couple of interesting challenges. One is the product line itself, clothing, but your locations in retail malls, they're under a lot of pressure. You're going to be looking at that model of being located in malls. Do you have to rethink that because of what's happening with retail real estate?
Well, we've been here on the South Shore since 1947. This is our 73rd year. We've been in South Shore Plaza since 1977. So, where we're situated in South Shore Plaza, we're really right in between two entrances. So that speaks to the convenience that guys look for, being able to drive up, walk right into the mall, be at their men's store, not have to perhaps walk through a mall to get to the men's store. In Chestnut Hill, we've got a freestanding store that's adjacent to a lifestyle center in Chestnut Hill Square. And we actually just signed a lease this past December to open in the Burlington Mall in a redevelopment of the Sears space, which will have for the first time in many, many years, both an interior and an exterior entrance. So again, like the model that we have here in South Shore, you'll be able to drive up, actually walk into our store from outside, as well as access the store from inside the mall.
Great. And if you can't see the chat column on your screen, Steve Daner out of Hanover was just up your place Saturday picking up a suit for his son. That's
Thank
something
you.
I've heard for a long time, somebody getting a suit for their son.
Fantastic.
Had a great experience there.
I'm glad to hear that. I appreciate that.
We have gone over the hour. I could easily take this to 10:30, but I don't. We are going to take a break for a few weeks as we kind of rethink this format. Bob, want to thank you again for everything you've done for me personally and for the Chamber of Commerce and the South Shore and joining us this morning. We really appreciate the time with you. It's good to see you. Usually we get together once a year for lunch. Sorry we haven't been able to do that this year. But maybe in another month or so, we'll book that and get together in person.
I look forward to that, and I appreciate this opportunity to connect with a number of old friends and meet some new folks. I'd also, since Dana was just on speaking, Dana noted that we've had a long relationship. I have to say that, I am just so impressed as how Milton's has adapted and dealt with the adversity and the challenges of COVID-19. I think so many people can learn from the practices and plans that Dana is working on and has implemented. And I'll also give him a shout out because my son's getting married, and he took care of his wedding party, and like so many folks who are getting married, there's been a lot of challenges and a lot of changes to the wedding plan. So these guys have a patience of a saint in dealing with all those challenges. So thank you very much.
Right. Thanks a lot. And Heather, you have the calendar, our calendar. When does the Will series start? Let's put in a plug for that.
Thursday.
I'm sorry,
This Thursday.
this Thursday.
Yeah,
What
this
time?
Thursday. 9 o'clock with Darlene Hollywood and Monica Higgins of Hollywood Agency. And then it's every month until November. Right? Is that right? That's right, Courtney, right? Yeah.
Yep, that's right. We're starting
Yep.
starting this Thursday at 9, and then we'll have a session every month through the end of the year. So we're looking forward to it. So
Thank you. We'll
Thanks,
see you
Peter.
Thursday.
Thank you.